A lot of kind of cool stuff. Last week we were interesting week as far as the markets went. We really had like almost no economic news, and you guys know how much I love economic news. In contrast, wow, this week there's a lot going on. So all kinds of crazy stuff. Let's go ahead and just dive into things. Oops, let me hit one button. I just kind of minimized something. I'm gonna make sure I had the right charts up here. Oh God. All right. So for those of you that don't know who I am, my name is Brian. I'm the president and CEO of Keep Trading Simple. So I've been doing this for quite a while. Giving you guys the quick kind of 30-second elevator speech. I started trading back at basically the middle to end of the tech bubble, back right around 2000. You know, Y2K. You guys remember Y2K? So I've seen a lot of ups and downs. I started the traditional way that everybody else did. Like my dad is not a stockbroker. I'm not like a fifth generation trader, any of those things. I kind of learned it the hard way. I read books. Back then, there was no such thing as YouTube. Um, I mean, I did it the way that most people normally do. They start off on their own. So I learned a lot of what not to do during the years. And I learned stocks. I learned options. I finally found currencies. And that was a perfect kind of match for my personality and risk tolerances and everything. Ended up coming across to the futures market. After a few years, I became a financial advisor and kind of got an inside look at what trading is about. You know, Wall Street. You know, we hear about it, what it is from the outside, but I actually joined it and ended up, well, I was actually lucky enough. After I kind of left the financial advising realm, again, it wasn't what I thought it was going to be. I went out on the road and started teaching people how to trade and going around and do seminars for peoples and classes and things like that. I was actually lucky enough to walk by the New York Stock Exchange every single morning when I went to work. Where I stayed was actually one block away from the New York Stock Exchange. I walked right past it. So it's kind of cool. I've been kind of immersed in it, but I really found that my true passion was really teaching people how to trade the markets. Learned a lot of different things, not only about trading the markets, what happens behind the scenes, but what people's kind of notions are about what is happening and where they are right and not right. What I do is my strategy is slightly different, and we're going to kind of break the markets down today. My strategy and the way that I analyze markets is at a very simplistic basis. I am one of those people that I'm a big believer in keeping things simple, removing distractions, really getting into the fundamentals of what's happening. And again, that's just how I do things, right? I've created a number of different classes that are, primarily focused. Can't talk today, must not have had enough coffee. 30-minute trader, some 5-minute binary courses, high volatility classes. I do weekly breakdowns. But I do these presentations for Nadex, and I've been very blessed to be able to do that and share them. So my goal today is to give you guys whether some type of aha moment, some type of golden nugget, something that you didn't know before. And each week, that's my goal. Even if you've been watching this for 5, 6, 7, 8, maybe even a year, I want to make sure every single week I give you something new that you guys either didn't know or had forgotten. One of the things about trading is, there are some people that have been trading for so long they've forgotten more than many of us even know. I want to make sure that I give you guys the information that you need. Any questions that you guys have, you're more than welcome to answer. Go ahead and type them in chat, or I'll give you guys an email address later today. So before we dive into any charts, I do have to cover one Nadex risk disclaimer. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile and investors risk losing the cost to enter their transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including forex, stock index futures, and commodity futures. We will cover all three today. Now, Nadex is a registered trademark of the IG Group, if you guys didn't know that already. So let's dive right in because I got a lot to cover today. I want to make sure we get out on time. If you guys have been here before, you guys know that we typically follow this path, right? We talk about what are the upcoming news events this week that could provide potential large amounts of movement inside of the markets. Now, are they guaranteed to move things? Obviously not. But these are typically areas and times and releases that have a high potential to move the markets. And there's a lot of them this week. Then what we'll do is I'll break down the indices and where they are. As of last week, I started tracking kind of where price was when we were talking. And I've left it on the chart the entire week. So you guys can see as we go week by week how things are progressing. Because a lot of times I'll do an analysis, a breakdown. And I say if price gets back up in this area, I'd potentially be looking to get short or go long. And I want you guys to see kind of where those things kind of went off of as part of your own individual education, right? We're covering indices. We're going to cover forex, which again, there's a lot of forex opportunity this week. There's so many news releases overseas, and then we'll also cover commodities. By commodities, I mean gold, oil, and I actually have silver charts up as well. If you guys still like silver, I will definitely continue to, continue to add that one in there. Nadex has a couple different products as far as commodities go that you can trade, so that's why I've kept them in. All right. So first things first, let's go over to my normal website. Right, I'll pull in Forex Factory. Hopefully, you guys can all see that pretty well. I use Forex Factory. There are many other websites out there that you can use. If I'm not here, I will typically use DailyFX. DailyFX has a lot of the same information, but one thing that I do like about this is it has the scanner at the top. And the scanner, as you guys know, I say it every week. The scanner is a way for me to look and kind of see where are the movers, where are the shakers, who has the power, and who's on the weak, path for the day, right? Today, the biggest thing that's ringing out is, man, the pound is just getting hammered. But again, that started early this morning, right? They missed their forecast for GDP pretty bad. It was supposed to be 5.5 for the month, 1.8. Earlier today, when I looked at this, we had this was over 100, this was over 100, and this was over 100. So these are kind of retracing back slightly, and again, coming back into, kind of their 24-hour move area. But man, they were huge. And again, this is a big news release, and that's why news releases are so important to know when they are. So for the rest of today, all we really have is the Japanese yen. And again, this is the BOJ outlook. This has the ability to move the market slightly. It tends not to affect our overall indices, but it is important to kind of understand, because if you were trading currencies and you were dealing with anything with the yen, obviously that matters. All right. Going into tomorrow, Wednesday is a very, very big day. You'll see this area here, this marked off gray. There's a lot of news releases tomorrow, okay? I don't care if you're an ES trader only or you only trade crude oil. You need to know a lot of these different things in here. Now, again, if you are a night owl or you're West Coast or live overseas, this CPI in the morning could lead to another kind of, big move based off of a big miss, right? But for the most part, the big things that we want to watch out for tomorrow, regardless of who you are, is industrial production month over month. Right now, the market is priced in 4.5% increase over the prior month. And again, obviously, these are COVID numbers, right? Well, if this industrial production is either much higher or much lower than what the forecast is, that's going to set the tone for the overall market tomorrow, particularly the indices. Now, starting at 10, we have a lot of information coming out of Canada, okay? Now, there's not expected to be a change, but it's always nice to know what our neighbors feel or believe about COVID. Again, knowing other countries is extremely important. Right now, if you guys have been watching the news, and again, it's probably lower, right? It's probably lower down here. It was on there from yesterday. It's probably down here. You heard Justin Trudeau from Canada talking about aluminum tariffs, okay? Aluminum tariffs. That affects a lot of different industries. Obviously, the auto industry. It affects the Canadian government. It deals with our metals manufacturers as well. That's why it's kind of important to hear what they got to say. But then we dive in at 10:30. We go crude oil. Crude oil is supposed to be showed down. Last week we had huge surplus, 5.7 million additional barrels they hadn't planned for. So, again, a lot of movement there. Then we have a press conference, and then late in the afternoon we start with a lot of the kind of the nighttime data, right? And if you guys have heard me say, even if you are just a, say, US-based index trader, there's a lot of opportunity to trade at night, make some money before you guys go to bed. And if you're not doing it, it must mean that you're not serious about this job, right? Your job as a trader is to strike when opportunity exists. Something like Wednesday night this week, you have New Zealand CPI, which we can't trade that at Nadex, but that will tend to affect the Aussie as well. But then we have employment change for the Aussie and the unemployment rate for the Aussie, followed by Chinese GDP. Now, Chinese GDP, you think that's important? Does that affect a lot of the world? Heck yeah, it does. It affects all of Australia. It'll affect US-based numbers. It'll talk about, what's their manufacturing capacity. So their GDP, which is typically rather high, is only supposed to be 2.2%. That is low. They were pushing 13, 15% for the year, a couple years back, and now they're talking about 2.2 for this quarter over year. So this is kind of a big deal. Remember, a lot of the first shutdowns and things like that started in China. So seeing what their GDP is, seeing what their recovery has started to look like, could also give us a foreshadow for what's going to happen here. Okay? Could also give us a foreshadow for what's going to happen here. So, just keep that in mind. So, Um, a lot of different things tomorrow. Tomorrow. Thursday, we also have a lot of things going on. Again, very early in the morning, we have GDP numbers, and this claim account is basically what our unemployment is. Okay, knowing that this unemployment is going up or down, you think that's going to affect the pound? Heck yeah, it will. There'll be some great trading opportunity. And then we talk about this right here, 7:45. The monetary policy statement. Again, they're at zero. They're not cutting it. They're not going to pay people to borrow money, right? But understanding what their recovery is looking like and seeing Europe as a country, as a kind of a region, very important. Okay, if you've never read one of these monetary policy statements, they can be a little bit funky, but it's really the analysis and how the market absorbs it. I'll tell you right now, Europe is a big trading partner of ours. If they are still having problems and they don't have a good plan for recovery, we're going to see it here, and it's going to affect the United States markets as well. Remember, if they crash, we can't sell goods and services to them. That's going to hurt a lot of U.S. companies, okay? Earnings will start to tank. Markets will continue to fall even worse. Then we're in big trouble, right? 8:30, we have the non-farm employment change for Canada. Again, that could be a big, big mover in the dollar-CAD currency pair, followed by retail sales in America. How much is the retail market making, right? Again, it's expected to be 5%, right? Previous, we were at 12.4. What if this came in as negative? What do you think that would do the overall markets for the day? It would tank it, right? Some good stuff there. And we have this 8:30 unemployment claim on Thursday. I think this is going to be a very important number to watch this week. What did we start to see from last week, right? Last week, we started to see Florida shutting restaurants down. Yesterday, I saw something from the night before that they are now shutting restaurants and indoor activities in California as well. Well, if all these people are getting shut down again, will they go back on unemployment? Yes. Yeah, because they're just not going to just do nothing, right? They're going to go back on unemployment. They're not going to wait. They know how to do it now. They've already been on unemployment once. And again, more power to them. This number, I think, is going to come in low. I think this number is going to be higher, which, again, could set the indices off for the day. And then at 10, we have the U of N consumer sentiment. Obviously, a very important number. 79 is a bit low. It's going a little bit higher, but we'll see where this one goes. It's going to depend, vary region to region. But again, could be another number, and that's on Friday. All right, so Wednesday and Thursday this week, they are just chock full of news releases. Many of them that will affect not only the U.S. markets, but the world in general. Also commodities. So much stuff going on, guys. Where last week we didn't have much. There is just, I wish I had the extra time this week just to kind of break these down more. That I saved from last week because we didn't have them, right? So a lot of stuff going on. All right, so let's go across and look at the charts now and see where are there potential opportunities based off a lot of these news releases, and how can we play them later in the week, right? So this one's already jumping ahead. Look at this. Oil is already trying to get up here, right? Where is it? I hit everyone but the one that I wanted. All right, so NQ, all right? So I put a dot all the way back here. I'll go back up to the hour. So here's where we were last week. And we talked about one of the biggest things that we needed here was we had to find kind of that new failure to go higher. Because, again, we were in an uptrend. We were pushing all-time highs. We were trying to see kind of where can we find some type of a top in the market, right? There are specific patterns. We've seen pullbacks happen. But where we were looking. So we were over in here. We weren't really at a high. Again, it just pushed a bit higher. We weren't really getting that pullback. We put an order in down here where we said, hey, listen, if we get a break back down to that level and we get some type of retracement, look for this to collapse lower and potentially head over into this 10,332 range, right? Now, the markets continued to push up last week. And again, we had one piece here, hammered down very, very quick, grabbed some more orders and went higher. Okay, we had another one here. And again, this is kind of that same pattern. This was after, obviously, our meeting last week, because that happened over here, right? And we came back up and had another push down. Again, this was kind of one of those patterns. We had a push up and then a failure to go higher, set us up for a short position and drop, right? Then we came through and we ended the week and we kind of went sideways on Sunday. And then we had a big rally up. And again, all of a sudden, a big accelerated rally. We ran into sellers. And that's where we just had that huge, absolutely monster collapse. And now we're starting to talk things in the other direction. You guys can see the area that we put in over here. We said, hey, listen, if it continues to fall, and we drew this, well, look what happened. It continued to fall. It came across and hammered all the way down below where our profit target was on that one. So where we are now gives us a little bit more room to kind of maneuver, right? There's more things that we could look at, right? There is a zone sitting above where we are. Now remember, this is ECN based data, so it's going to be my numbers will be slightly off. So you need to find it on your charts, particularly this area here, right? This is an area where price tried to rally back up. It actually ran into kind of a little hidden, and again, you guys can't see it because of the resolution, but there's what we call a wick over wick here, and that's what kind of turned this around. It's an idea where it's an area where there's sellers in. It forced it down. It came back up and retested. So I had to put it a little bit lower because ECN prices tend to be a little bit high, but approximately around 10,677, there's a zone where, again, sellers have stepped in. And when they stepped in, it was a big push, big push, big push, and then again, we got into this wackiness. But that's quite a big push away on a small time frame when the markets became live. So it's something we need to watch out for. Right now, we're kind of in the middle of the range, so it's a little bit harder to say, hey, listen, we're going to do this when it's here. I'd be looking for 10,677 as areas where we're looking for some type of a confirmation to go short. And again, if you can coincide this with some type of US-based news release, excellent opportunity, right? Today, obviously, it's already 12, so we're not going to have as much movement, not like this. Most likely not like this. I mean, I guess it could, but and vice versa on the other side. I'll move this over so it's a little bit closer in kind of context. But approximately down here at 10,336. So those are the two areas where I'm looking for buying and selling areas. Need a little bit more movement. Again, triggers for me for these two areas are going to be US-based news releases. Okay. That European monetary policy statement, because again, if we lose a big trading partner because, of tariffs or anything else they're shutting down, that could potentially move it. And number 3, obviously, US open, US close, or the 10 o'clock reversal. So if you want to write those kind of 5 things down, if I had to rank them, I'd say open, market close, 10:30 reversal are probably all tied right around the same area. And then obviously, news releases and European events. Okay. So 10,677, 10,336 for those. Now S&P, we were sitting right here. All right. Now it's funny because this is where we were last week. I was trying to draw this one. I couldn't get a good. Oh, I just deleted it. You guys saw it. It's right here. All right. Fortunately, I could not get that one to. There we go. Got it to stay. Yeah, that's last week. All right. We had drawn this level, and this level's pretty old. We've had this one up here for a long time. That level at approximately 32.19. That ended up being where the major turning point was. Now, this was a zone that we originally formed off of this 4-hour level. And again, this is that failure to go higher that I mentioned a lot of times, right? We had a new push up, we collapsed, it immediately came back up and retested it, and then huge movement off it. Now, it took a long time for it to come back, right? That original kind of area where it was formed, right, was June 10th. So it's been about a month, a little bit over a month. Look at the result. Now, this one is a little bit interesting, and this is kind of one of those things while sometimes Nadex gives us the best potential to be successful, okay? If you see this candle right here and where it actually drew the new box where there are sellers, it went just slightly above, okay? One of the things, and again, it's in the disclaimer in this in today's presentation, the most you can lose when you enter a Nadex contract is the cost to enter the transaction. And one of the biggest benefits for Nadex traders, and again, I would say in this case, particularly for the ES, if you're not trading with Nadex, if you're only using it in the futures market, you are potentially missing out. Because again, particularly where we are messing with all-time high range, and again, this is not all-time high range, but when I say all-time high range, look at the NQ, okay? All the markets will typically follow each other. Something like a limited risk entry, those are the ways to do it. It went slightly above had you traded this in the futures market, and you would have got stopped out, and look what you missed out on. An absolutely monster move to the downside. Whether it was a call spread, whether it was a knockout bracket, whether it was a regular binary, this is huge movement off of a level we knew was established on the 4-hour. Now, it did come back down. It did just actually miss the profit target we were looking at originally. There's actually a couple different profit targets. Obviously, the gap is something we needed to watch out for as well. But for right now, I would keep that 32.19. I can move it over here. Again, my number is off because I know that it's off by a little bit. I'm trying to get the number closest to yours. But again, you would have drawn it based off the 4-hour back from June 10th. I wait for it to come back up. There is a minor level. Obviously, we had a bit of a pullback in this area. So that's marked as yellow. I would still kind of keep that as a reference point. The price of that level is approximately, and again, I'm putting it lower on purpose to kind of match what yours should say, is around 32.05. Again, U.S. news release, end of market. And again, end of market is a little bit riskier, but again, you can get reversals there. 10:30 reversal in the morning is also another one that could be a good kind of turning point for that one. So that's an area right now that I'm looking for. Let me actually bring this over. Let's shrink it a little bit. I don't need a gigantic one. We'll mark that right there. I'd be focusing on 3205 and 3124. The second. Okay, that's a good question. We just got a question, guys, about where can I learn more about the second and third order effects of these news events? News events happen all day long. Like I said, I use Forex Factor for a lot of things just because it gives you it just gets you the information very very quickly. What I'd recommend is if you're looking to dive in and kind of understand these news events more, go to Daily Effects. They tend to have more information. They also have analysis that kind of breaks it down, that gives you more of a backstory about it and what can happen. Forex Factory is just kind of like it gives you the quick and skinny. If you already know what it is, I like it because it's very, very fast. But it doesn't have I don't think it really has the best articles. You don't really have people doing a lot of analysis, where Daily Effects wins on that one. That's why I mentioned them both. Because, again, if you're not familiar with them, it has the same economic calendar, but you can click on it and they have, professional analysts that are writing articles on individual releases that will go back and give you historical things, where if you just want the raw data with no opinions, that's where you get a Forex Factory. So hopefully that makes sense. So that's what we got going on here. So Dow. The Dow, all right, so this is where we were last week. All right, now you guys can see our little button right here, the yellow dot. So we talked about this was a nice little entry, right? We had a kind of a push up and it looks like it was failing, came back and retested. And then we talked about how this is where we were, depending on what it looked like. And again, this is what it looked like. Price got hammered down. Okay. Now, this one was interesting in the fact that the first time we came back up to that area that we discussed, that we drew last week, we missed it. We missed it. Okay. And again, this was a big kind of news-based spike, extended range, extended bodied candle up top, got front run on that selling, and bam, came all the way down to hit our profit target. And that is so, so frustrating. And again, that's why we have to make sure that we have, risk that makes sense for us. We can use out of the monies. There's a lot of different things we could use. And I don't remember, there may have actually been a knockout there as well. But as frustrating as that is, we got the opportunity just a bit later, about an hour and a half, 2 hours later. It definitely came up. You guys can see that it came above where this line is. It gave us the entry that we talked about. And what was the result? All the way back down to the profit target that we had talked about before, that 25,553. So again, this is what we're looking for, guys. We're looking for big kind of boom, movements in price. Again, we could have drawn another one here as well and gotten this one. So now we've punched up higher. And we talked about a zone that we had over here last week. A lot of this we got kind of rallied through, but again, we had many different attempts at that same zone. It was this one that I was talking about. So now we need to kind of adjust things and kind of update them for this week. Now, a couple of things I want to talk about here. This was a little bit of a Harry Potter, but we'll use that. We're going to talk about that on another one. Delete this just so we can clean the charts up a bit. I don't want to delete that. There. Delete that. I'll bring that back out for you guys. All right, so we are rallying back up again. My opinion right now, and since we've had, since the open this morning, is once we started to break through these prior highs, I was looking to go long. Okay, the reason why is because this is what we would call a parabolic retracement setup, right? Absolutely gigantic candle. This candle right here is the largest one on my screen. Okay, when you typically see that, particularly off something that is news based or something that it's like, whenever you have to ask what the heck just happened, what you tend to do is get a bit of a retracement. So once it stabilized itself and started to push further and again gain some traction, you want to go long. So I am still bullish in this position. I do think that this will come back up. It's having a little bit of a hiccup now, but it is lunchtime, right? If we can get back up into approximately the 26, probably 538 range, and again, my numbers are slightly off, I'm going to kind of flip from a more bullish biased to a bearish biased. Why? Because we're back up to an area where sellers have come back in again. Now, we're not at all-time highs. There's a lot of stuff going on. There's actually this order over here. I don't know if you guys can see it or not here. I'll go back and find it for you. This was one that we set up a while ago when we talked about this level. Here, I'll take this off. We'll change this to, you guys can see that color okay. Yeah, I should be able to see that one. So this is a level we talked about a few weeks ago. Okay, this was an area that we were following. When you go across, you can see exactly what we ran into. up in that same zone. So it's not the first time that it's hit this level. Obviously, this is the first time that we've hit the level, and there was the reaction off of it. But, and I say but, again, this is another one of those situations where I would be a lot more likely to take this in the Nadex market than I would in the futures market. And here's why. We've seen price punch through the top, but the reaction was so strong. For me, it's worth taking that limited risk entry that we can get with Nadex, not necessarily at futures where, hey, listen, it could go up and then hammer even higher, right? Because it blew through. So 538-ish is kind of where I'm also looking. And again, you guys can draw it based off the green body here in the top of the green wick. That would be another okay entry as well. Out of the way, I want this right here. Okay. So we'll see what that's able to do. And that's a later on kind of in the week thing. Maybe today, but I think probably more of a tomorrow morning thing. Now, areas on the downside, again, 25, 551. I wouldn't be buying anything off this area right now. If anything, I'd be using that for a profit target again. But this area here is also interesting. Again, this is one of my company's indicators. It's marking this off in here. This is kind of one of those hidden zones. It's a bit of a pullback area in there. If you guys get short in this position, if this is going to be the turn, if we get a confirmation here and you want to take it back down, me personally, I would have my profit target in there around the 25,878, probably a little bit higher than that, probably 891, because we do have a pullback. It was a nice punch up, it was a nice little pullback, and it was a continued push forward. So it's going to be an area where you need to make sure that you take some profits. Okay. All right, so that is the last of the indices. Like I said, where this one is on the daily, I mean, this one is definitely not as high as what we were. It's kind of consolidating, and it's really busy on the daily because we have all those little kind of small setups and stuff in there, right? Different things that we've been taking, but smaller time frame, those are areas we need to watch out for. All right, so that's what I'd be looking for right now. Now, switching gears, going across to the currencies. Now, the currencies. Here's where we were last week, and we had an area that we say, hey, listen, if we get into this area, we got to watch out for it. Okay, so very interesting setup. We dropped all the way down and we went right into the white box that we had kind of drawn earlier, saying, hey, listen, the last time the price was here, right? Let me move this just a little bit. The last time that price was here, it got turned around. So watch out for that. And that's what happened. The price came down, grabbed the level that we had marked off, right? And pulled back up. Now, it hit the zone that we had mentioned and ended up going down almost 3-1. It was pretty close. And then what happened was it went up and pulled through it. Okay. At this point, I said, hey, listen, we got to watch this zone here. It's been hit over here. It's been hit here. It's holding here, forced back again. And then I saw this and I said, okay, now we are all of a sudden back in Harry Potter range. Right, you guys, man? So right now, my students are actually trying to come up with a different name. I keep joking that I'm going to get one of these called. They'll be like, hey, Harry Potter's trademarked. And I had a joke on my Twitch stream the other night about, changing the letters around and trying to make it a little bit differently, right? So they're thinking of a new name for this one, basically this lightning bolt pattern. But when you find a zone like this, I said, hey, listen, it's sucked into it here, respected it here, came back, respected it again, respected it again, punched through. Bam, there's Harry Potter setup. I'm looking for white space below. As you can see, it pulled up and then went all the way down and went through the 1 to 3 and almost hit our 1 to 5. Back into the same level that we drew last week. So, got to be looking at this and saying, okay, we are good there. What's next? All right. So, slightly up, and now what we have formed is up in this 69,890 range. Again, that's an area that we talked about last week. Actually, last week we were talking about 70, and you guys can see we came right up into the top of it. And ended up getting front run, and that's what led the reversal back down again. So right now, I would say, again, the 69.20 is still holding firm down here at the bottom. And again, we punched down, here it was good, here it was good, here it was good. Came back down, and it literally just grazed the top of the zone. So I still think top-wise, we need to watch out for the 69.90-ish range. That is actually a 4-hour zone. But then we got the big daddy over here, this big 4-hour zone up here at 70. All right, so I would say if we go too much higher, I'd be looking to get bearish this position. This will also, be kind of drug along with the price of gold, so just keep that on your radar. Anytime if you get short in this position, though, 69.20, we got to watch out for that as well. It's been tapped a few times. It's holding firm right now, but again, I would keep my eyes on that one as well. And again, easy way to play this one, guys. Everybody keeps asking, well, how would I play this one? Well, Go back to the handy dandy chart here. What do we have tomorrow night? All this right here. Right? Unemployment change. How many people is getting hired? What's their unemployment rate? Well, guess what that's going to do? That's going to give us some great little opportunity over here. Okay, inside of this chart. All right. And again, this is happening at 9:30 p.m. Eastern Standard Time, so it's a great thing you can trade tomorrow. And I would do the same thing. Again, this is the 30-minute again. Here's the hourly. Again, if we're pulling up in this range for news, I'd be looking to get short for that news. If we're down here on this range, I'd be looking to get long for the news. So it's as simple as that, guys. And typically, just FYI, 9:30 at night trades, I typically like to use binaries the most. Again, there's a little bit less premium in them because there's not as many people trading in. Right? There you go. All right, Aussie yen is another one. So here's where we were last week on Aussie yen, and we talked about having a level just slightly above, right around that 75.06. As you can see, we had price come up, tagged it, and we ended up collapsing all the way through down, just went crazy to the downside, right? We actually had a zone sitting right in here, and again, that would have been our profit target looking to get out. Not only did it actually hit that level, and I think, let me see, did I have it marked off? Yeah, we were looking for this level here. It was right. Make sure I get the right level. It was that level. Now, oops, there we go. As you can see, this is another one of those ones that we're thinking, hey, maybe a little Harry Potterish, right? But unfortunately, we didn't get the entry until over in here. It ended up going 3-1 on this one, so you could have taken it a lot later, but it did kind of change the parameter slightly as far as where we want to take it. And as you can see, not only did it respect it over here, it gapped to it, went up. Kind of the same idea that this was a pretty powerful level. So it's something that I'm not trading off of, but I'm kind of keeping it on the charts, on my other charts. But right now where price is, I would still be looking for 75.06 on the top side. 73.74 is a bit far away right now on this one. So I think I would probably step in and say, listen, there's a 4-hour zone that is now formed right here. And then this is a zone that is formed on the hourly. So, the risk on it is rather small. It's only about 10 pips in currencies. That's rather little. It actually matches up very well to some of the Nadex contracts also. So for me, this is kind of a wait and see. And most likely, probably a tomorrow night setup. I'll be looking at the Aussie yen and the Aussie dollar. So either of these two pairs I think are going to be good. But right now I don't really have anything that's pending where I'm like, yep, we're good, because we're kind of sitting in the middle, right? You guys know I'm not a middle trader. All right. Looking at Euro yen. So Euro yen, guys, we had this chart set up right. We were sitting right here. And I talked about a lot of consolidation back and forth. We didn't really have much great. We had a little bit of a bottom over here that we were focusing on, a little bit of a gap, but didn't really love much. And again, we had a zone lower. So I think we skipped this one for the most part last week. We did have a trade set up later. And again, it took a little bit of a time to kind of come back and get it. And actually, this was for my guys, my normal group at night. So I forgot we were sitting over here for this one. So I'm going to move this one forward now. And kind of the same idea. I mean, on a daily, we're getting up into a daily zone right now. With everything that happened yesterday in the markets, I wouldn't be surprised if this kind of pushes up and finds some sellers. You can see that the area of sellers is marked off by the dotted line here. I can put a thing there for you guys to see it a little bit better. Right there. All right. So we're getting into that zone now. It is 4-hour. I do like it. I would like it a lot more if it was the top one, not the bottom one. But basically on lower time frames, I'm maybe looking for some type of a reversal signal to see if we can go lower. Okay. Like I said, this was an old one. I can take it off. I showed my guys the other day. Let's see. Make sure I mark these off. Just. There we go. Perfect. All right, so there we go. So nothing on this one. Like I said, we're in a zone right now. If we can get some type of a flip, I would be shooting for profit targets back to the downside. So in the next probably 24 hours, I would say Euro yen, I am more bearish. I'm looking for those sellers to kind of step in, and it's having some problems right now. We'll see if it's able to kind of turn, get that flip, give us the confirmation, and head to the downside. So pound yen. Obviously, pound yen had some problems. Here's where our dot was from last week. And again, we talked about, hey, listen, we've already pushed down. We kind of did a little bit of a base. It's pulling away. It showed us that some sellers stepped into the market. So it's kind of the same idea. Again, we ended up pulling back up, going into that same level, and we dropped back down again. So that was another one of those positions from last week. We talked about 136.55 as being an area, if we were able to drive all the way up there, that could be a great little entry. Unfortunately, we didn't get up that high. I do think that area is still valid, but we've actually formed some other levels in that area right now. Here's another one. Again, I kept this white one on here because, again, we've been mentioning this Harry Potter trade so much. Here's kind of the same thing, right? We formed the level. We used the level. It based in the level. We said, that's interesting. We've already gotten our profit out of it. But it maintained that level. And it came back up, and what did it do? It maintained that level again. And what did it do on the other side? It hit that level, and it also continued to push right down from that level. So that is an interesting level. And again, you can see a new one is actually formed in the same area. So you got to be kind of thinking that, hey, I maybe got to pay attention to this one, right? That level's approximately 135.34. I actually have sell orders and alerts sitting up at 135.70. So I think the upper range of this is also good. This did have a good reaction. It based right below it. So I do like that. As you can see, the 134.06, again, it's a level that we marked off last week. I think that area is good, although it's pushed pretty deep in there. So at this point, I'd probably adjust any of my buys down to probably 133.90, okay, top and bottom. We'll see if it's able to kind of get any, traction right now. But again, this movement today has all been based off that GDP number early. So kind of the same thing. Tomorrow morning, there's also CPI data for the pound. That could also signify where this one is going to move. It'll probably start getting slow now because obviously the pound is closed and the yen is, again, it's going to be at the mercy of the U.S. market. So look for that one. This one, and again, this is one of those interesting things too. This one potentially could have some movement tonight whenever that monetary policy statement comes out for the yen. Okay, we have a tentative. We don't have an exact time. It will come out later on tonight sometime. When we get that will provide some movement. So that's the only thing to watch out for this one before that morning release. But 135.04 is the aggressive. 135.69 is the conservative. 133.90 is also more of kind of a, I'd say probably a little bit more conservative. But again, it's it's already been tested once. Pound dollar. Also pushed to the downside. We had a bit of a Harry Potter. We never got a pullback, but I'm going to keep that level on there and kind of see what it looks like next time. As you can see, we were over here. We were rallying. We talked about pound strength coming back into the market because we had, the pound was beaten down so much and it just continued to push higher, 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 higher. So for the most part, a lot of these, again, we had talked about 126.62 last week. I believe that was a 4-hour. Yeah, it was actually based off of a small 4-hour level right here. As you can see, we ended up coming in. There's where that price that I mentioned last week was. As you can see, we hit it, ended up coming at least 1 to 3 to the downside. So I would say that level is still probably valid at this point. These were all kind of minor ones. It ended up hitting it twice, but 126, I'll move it across, but we're probably still good with that level, right? 126.60 is still our area for sells. Buy-wise, again, I would say we definitely had some orders step in here. And again, you guys can see it did get front run there, but probably, I think at this point, go a bit more conservative. 126.60 or 124.66 in that range. And I say range because depending on where the binaries are printed, we may get a little bit higher, a little bit lower for that entry. Could be great. Also news release. And again, we're retracing back all this bad data, right? All this bad data, right? In the overnight from that horrible GDP. Now we're retracing back again based off an area of buyers. So 126.60 and 124.66 on that guy. Now, euro pound. We talked about the euro pound was just boring, right? We had all this non-movement, and you guys can see we're right here. And what did it do for basically the next day and a half? Nothing. It went sideways. We had that area marked off, that 90.10, and we just missed it. We basically missed it by a very, very small amount 3 separate times. Okay. All right, this chart should actually look like that. Missed it by here just slightly, missed it here slightly, missed it here slightly. So again, the analysis was correct. We knew that, we assumed that there were some sellers. There was, pushed them all the way back down. And then it went down to that low level. Okay, and then we gapped. So since that time, and again, you may have heard me talking about this before, again, on the 4-hour, we had such a big kind of euro weakness, pound strength push, but we went right into large levels. And again, you guys can see this has moved so much in such a short period of time. I would love to say if price is able to rally all the way back up to here, let's start getting short at 91.42. It's due for some type of a retrace. It's just finding where is that retrace going to take effect. There's some small levels in here, but I got to say, we're seeing it right now. This is so much movement in such a short period of time. I don't think that the pound has got everything going for them. I just see that there's just going to be more. I don't know. I just feel that this push today is going to, like I said, the numbers for the rest of the week for the pound are going to matter. It's very rare that you can say that everything's going to matter. The euro pound may not be the best way to play it. It may be better with the pound yen or the pound dollar, but the euro pound has just put in so much movement after all this boring. It's just great to see it moving. So for me, 91.42 is an area where I'm going to be looking at charts saying, all right, what kind of formation do I have? Do I have at least 1 to 3 risk reward ratio for this to move back to the downside? But for at this point, we're still in a holding pattern. We need a little bit more of a push higher. Now, euro dollar has also had a push, okay? I forgot to put a little dot on it, so I'm going to put the dot on this one right now. Have it for next week, okay? So we had marked off levels here about 130, 113.79. You can see we kind of pushed away, kind of the same idea. But this is what we're looking at on a kind of a larger scale, right? On the 4 hour, we were pushing pretty deeply into the zone, and we had marked off 113.79. We hit it once and kind of pulled back down again. Today, it is actually driven and pushed back up into there again. So this is actually hit number 3 on that zone, which again, remember, hit 1, hit 2, typically pretty good. Hit 3, typically starting to fail. Number 4 is typically where the failed, most of the time comes in, right? Sometimes 3, but most of the time it's 4. So this one's a little bit early. We do have a daily level. And again, 4-hour levels are great. Daily levels are better. The higher time frame you go, the better off the level tends to be. So this is kind of what we're looking at right now. And again, on a daily level, you can see where that level's at. Here's the reaction off of that level. Okay. It was 1, 2, 3, 4, 5, 6, 7, 8, 9 days of straight down, moving 819 pips. Okay. It is a daily ATR of 75. This was a huge move off that level. So typically when we see this, you got to assume, hey, listen, it went pretty deep into this zone, but look how much power this thing dropped down with. There's most likely some sellers still sitting there. So when we get up in that range around 114.45, we have to drop it back down to lower time frames, 30 minutes, 15 minutes. Look for levels. I mean, there are, obviously there are going to be some levels in there. It's so far back at this point, though. We're not going to be able to see it on the lower time frames. We can go back, but I'm not going to do it today. It takes too much time. We got to look for smaller levels in there. Again, look for failure to go higher situations. Look for any type of nice push, and then look for that kind of pullback, right? That quick pullback. That's probably, things like this. Nice push up, push down, and then boom, another pop. And what did it do? It came back down to that same level and then offered another pop off of it. And again, another pop off of it. Eventually, obviously, it breaks. This one broke on 1, 2, 3, 4 went through, and 5 is what broke this one, if you're counting these as 2. But technically, it's 1, 2, 3, 4. Yeah, so number 5 broke for this, but you guys get the idea, right? So that's what we're looking for. 114.45, looking for a reversal, shoot back down. Profit targets probably here, and also probably down in this area as well, are going to end up being speed bumps to the downside on that one. All right, now dollar CAD. I thought I marked this one off too. Yes, we were here. All right, so another example. Let me pop this off. So here's where we were last week. Okay. And we said, listen, we have a level just below. We'll see what that's able to do. But if we get up into this 136.14, we need to be looking for sells. And we ended up getting those sells. And here, this is the exact pattern that I just talked about, right? We're going to do the same thing on the euro. Look for it to punch up past that level, and then look for a pull away and a retrace. And here was the pull away and the retrace on this one, right? And that ended up moving down. You guys can see we had, some things set up. But here was the level to the downside that we were saying, hey, listen, if we can get a pullback now, that would be a kind of taking off point. We ended up going much higher, so it kind of invalidated it as an entry for long, and it became a target for short. It ended up blowing down, and I wanted to say, hey, listen, that level was pretty good. It got burst through on a news release, and we pulled back up, and I was like, this level will be interesting. Although we did not get the entry to the downside, we did not get the pullback. It made me wonder, will this old become new? And I kind of marked it off saying, hey, listen, we'll see what it does when it comes to this level. If it turns and releases, there's your target. If it punches through, same thing. Let's look for that continuation trade to the downside, because technically the short trade would have been on this green bar right here, right? And we missed it. And it went not only past 1 to 3, but it went all the way past 1 to 5. It was almost, I think it actually made it to 10 to 1, or close to 10 to 1, right? When it came back up again, the trend had changed. So for the trend continuation, or the Harry Potter, or the lightning, or a couple other ones that my students are talking about, here was your punch through, there was your space, there was your retest, and as you guys can see, not only did it hit 1 to 3, it came all the way back up to that same region again, up to 136.14. Now, where we are now, that 136.14 area, I still think we need to respect this area as an area of selling, but on the larger time frame, you can see we really don't have too much at this point. Again, that was a small zone. We really don't have too much. And at a conservative level, again, if I put it right here where the price really took off, 136.76 is really, it's really where we should move this to. We should really kind of be bringing this up and say, okay, there's a lot in here. We've hit it multiple times. We've bounced a whole bunch. We got a little bit of a kind of a sell that we're looking to get into to the downside if we can reverse back down here, right? But we got some room to run. Okay, I wouldn't say that any of the levels in here are great. There's nothing sitting over here. Technically, this area right here, there's a racetrack sitting in this level. Really, I guess at this point, it's to this level right here now, right? There's nothing over here. We can't really read anything in price. So for me, if we can get back below this 135.42, I'm looking to kind of overtake this area in a sell. If price is able to come up to that 136.76, that's the other area where I'm looking to get short. So it's kind of a short from here or a short from here. There's a small little level right now that, again, if you're looking for something aggressive, there's a bit of a level right here. And if this breaks, there is probably a kind of intraday target. You know, again, if you guys are, you know, looking for something a bit more aggressive, there's also a short back to this level down here at 135.70. Okay. All right. Yen. Ah, the yen. So here's where we were last week. And I mentioned, hey, listen, there's a level right above where we are. If we can get up to that level, we're probably okay. We did actually get up just a little bit higher. We pulled into that level. We ended up pulling away, and it was a slow trade. I mean, it kind of went down. It hit and kind of went across, and then we based a whole lot. I would say that these levels up here are still probably valid. 107.70, it's the same level we talked about last week, is still good. If we're able to bump through 107.99 or basically 108 would be another area. Let me drop it up one more time frame. So I still think this is the best one over here, the 107.70. Again, I think we will take one more push to the downside before we push higher. As far as where downside longs kind of come in, okay? Since last week, we have put in kind of this new low down here, right? Where we pushed down and it literally rode right along the top. It's technically a 4-hour level, and it's only about 16 pips. The daily ATR on this one is not huge. It's only 51, so it's, you know, it makes sense that would be there. Here's that level. I would have to say we need to be a little bit more aggressive with this one because it's been kind of shrinking, right? I mean, you guys can see, look at the daily ATR. We had this craziness, right, during all this, and now we're really actually kind of we're kind of lower than what the average is, right? It just kind of died on us, right? So on a 4-hour level, getting a little bit more aggressive, I would have to say that 106.77 would be an area where I would be looking for long entries. So 107.70, here I'll remove, let's see, that one. Something will disappear, I'm sure. Good, that's the one I wanted. So 107.70 and then 106.77 are kind of the two areas, top and bottom. Again, check out your knockout brackets. This is a knockout bracket based pair, and look for, you know, close to proximities for ceilings up top, floors down here. You guys should be good. Dollar Swiss. So here's where we were last week. Actually, it would have been, whoops, shrink this a little bit. It's right here's where we were. Okay, so I'll shrink it a little bit more. Right here's where we were last week. I'm gonna move this forward. Now, we talked about last week saying, hey, listen, if we can get back down to this level, we should be okay. There'd be, you know, look for what we got here. We ended up not only breaking through that level, but pushing a little bit lower into kind of a buying zone. Again, this was just some bad news-based data here. Top side, we were still good. Right now, again, we were pushing into these lower levels. And again, this is kind of why I was like, right? It's a big level on the hourly. And then when you drop it on the 4-hour, we can see that we kind of lose it. We kind of disappear. So I still think 93.47 is probably the best area to go long in. In my eyes, it's a bit far. I mean, it's about 35, 40 pips from where we are right now. But just being with how long it's been since we've been there, it gets us out of the chop, you know, because again, on the 1 hour, you guys can see we got a lot more chop going here, right? You know, kind of came over, kind of ground its way down, ground its way right back up. We chop sideways, we drop, we chop sideways, kind of ground up, a little chopping in here. So it's been kind of choppy. I think that the 93.47 would give us a clean long when we get there. And right now, it's going to have to chunk through and do its best to kind of punch through these two levels right here, hourly. So not the ideal setup in my eyes, but 94.42 up top, 93.47 on the bottom. Again, knockout base pair. You know, you maybe to pick something up based off of a news release later. Okay. Now let's go across to gold. So gold, here's where we were last week, and we talked about, hey, if we can get a short below that level, we should be good. We talked about areas up around 18.15. We ended up punching sideways for a while, went just higher. We ended up going just a little bit above. Like we went to 1817. We had a level here at 1816. So we still have an area that we're kind of looking to get short here. We ended up having one spike down, so it did not qualify as an entry to the downside yet. What I would say is the new level that we had formed was 1816 to 1812 up top. It's been hit one time, but had a great reaction and then got front run. If we push much higher, I think 1812 is probably a good area. There's a couple things that can derail this week, and that's why I wanted to make sure that we covered it. Tomorrow, there's a couple things. Obviously, BOJ is one thing, but industrial production could definitely hurt this number. Crude oil can definitely hurt this number a little bit. Not that gold and crude are linked that much, but typically crude is a kind of a demand gauge. If the demand is down, that also means that the market and sentiment and things like that are not good, which typically is not a good, again, no inflation, gold doesn't move, right? But the also unemployment will also move this one a little bit tomorrow. And then same thing, going in here, the core retail sales number. So there's a lot of stuff in the next 2 days that could really derail this one. And again, we may hit this later today and bounce back down again. But I think as far as kind of on a macro level, I think this top area needs to be watched. And I believe this bottom area needs to be watched out as well, around 1777. Either of those levels are pretty clean. And again, high on the curve tends to yield pullbacks. And again, we had one here, we had one here, we had another one here. I would say I'm bearish at 1812, but again, 1777, I'm probably long. And again, I do have that one little kind of a short entry I'm still kind of holding for this area. So it's kind of a break of that into kind of these two kind of bits here, right? Right, whoops, right there. All right. So still holding that. And again, this did not qualify because it literally spiked down and came right back up. It didn't give us that space, right? Remember, Harry Potters are looking for space, and we didn't get it. Okay, actually, there's a little one right here. I'm sitting right there. Oh, snap features get to me sometimes. Again, punch through, came up and retested, and then pushed back down again. So, all right, so that would be gold. Silver, again, I know not as many of you guys do silver. Silver is also on a daily basis up in an area where I'm looking for people to start getting more bullish with it. As you can see, we kind of have had a level drawn up here at 1923, and we punched into it, turned around and punched right back down again, and came back down into another level. So it's been interesting. Like I said, not as many people trade this one. My feeling is kind of the same. While it's great that they're talking about inflation, silver also doesn't only act as a proxy for gold. Silver is also kind of an industrial metal, as is gold, right? But silver, and if you've tracked silver pricing, it can be affected by the Chinese economy, the Chinese market, and in particular, Chinese industry. Okay, you're seeing it, gold and silver, but silver and copper in general tend to be bigger movers with Chinese news. Well, we just happen to have Chinese news coming up, GDP tomorrow night. So that's again another one of those things this week that can kind of derail this. Sitting right here, right? Again, GDP is getting a gauge on gross domestic product. Again, basically industrial production. All right. What are people what are people producing, buying? Again, what is the gauge of their economy? Bad. That means probably the U.S. is coming in for bad, which will lead to push this to the downside. Okay. Now, not last but not least, oil. So here's where we are right now on the 14th. And if we go back, we can look at the 7th at the same time. Let's see. Hourly. It's saying right here that we're at 16. So we were sitting right here. Okay. Now, we marked off last week there was an area above and an area below that we were looking for. Okay. We ended up getting the area above piece first. And as you can see, the inventory reports. And again, I mentioned this last week, guys. Just because we have levels higher, it doesn't always have to wait for the oil news to be released. We were hoping that it did, but what ended up happening is this one ended up triggering in the overnight, ended up hitting this top level here at 41. It came across, and then the oil news came in and finally kind of pushed it in our direction. Okay, so it did push a little bit lower. There was another little risk, trade down here to the downside. But based off of where we are right now, okay, with current price, I'm going to move kind of some things around here and talk about two different levels, all right? There is a level slightly above where we are. Here, I'll delete this one. That one's already out and profitable. So I'm going to extend this one across. Now, this level here, we're really, really close to it. We just hit it right now. I would be cautious with this level because, again, we had basing pullback drop. Again, that signaled this short to the downside. And again, it did move out with a lot of momentum coming out the downside. So as of right now, I would say, yeah, I would be bearish this one over kind of the remaining day into tomorrow. Areas that I'd be preparing for tomorrow would be down here. Okay. If price is able to kind of punch its way all the way down here, and again, this is down at 38.82, you'd have to move about $1.30 or 40. That's quite a bit of movement. It's more than likely that it will find some, if it's going to do anything, if it doesn't just kind of close itself down here, it's already punched in this area 2-3 times. So if we can get a punch higher before news release tomorrow, 41.04 would be another sell for me, right? There is a smaller zone that comes in right here at 40.49 or $40.50 that goes for about a 20-cent risk up there. Again, you can play this with knockouts. You can play this with binaries. You can play this with commodity call spreads. So there's many different ways to do it. I'd say bearish in the near term. Let's see where it stabilizes. Typically, the best way to follow this one, if it doesn't hit in the overnight, is to see where price is right before the news release. See where they, where the market has put levels in. Those tend to be telltale signs of it. Again, that's how we were able to find this $41 mark that not only pushed it over here, but ended up leading from a drop from $41 all the way down to 38.50. Again, off of that one level, and again, drawn off an hourly zone. So, that's what I'm looking for now in oil. Again, a push across, and again, buying kind of down at this 38.85 range. How do people join your nightly chart school? Jill, Jill, it's just free. Yeah, it's just, I'm on Twitch. Actually, lately haven't been doing them at night. I've been doing them in the morning. I've been doing 8 to 9 a.m. on Twitch under Keep Trading Simple, and I'll show you how to find that in a second. I'm on there right now as well. All right, so that's the last one, guys, as far as the oil goes. If you have other questions, like Jill just asked a great question, first off, make sure you guys attend next week. Sign up. Come here 12 p.m. Eastern Standard Time on July 21st. This is how you find where I am, Jill. If you want to screenshot this, you're more than welcome to do it. Twitch is pretty simple, and again, it has 9 p.m. nightly. The last 2 weeks I've been doing in the morning to help traders kind of more morning, and I'm probably going to keep that for at least for the rest of July. It'll be typically 8 to 9 a.m. in the morning is when I've been doing them. But you can go watch the replays anytime that you want. But this is how you guys can find me. If you have questions, and Jill, you've emailed me before, you guys can always shoot me an email to support@keeptradingsimple.com. Sometimes it may take a day, but I try to get back as soon as I can. This is a kind of a crazy week for lacrosse after last weekend's tournament. So that's how you guys get in touch with me. Just want to say, guys, thank you so much for joining us again. I look forward to seeing you guys back again next week. If you guys want to join me on any of the other broadcasts, again, this week, 8 to 9 a.m., pretty much every morning, you're more than welcome to do that. You guys trade safe. Have a good week. Don't forget to look at those news releases. Again, if you need more breakdowns, go over to Daily Effects. They have great articles on the individual news releases by some really great analysts. Check those guys out. So you guys take care, and I will see you next week.